Brien Lundin joins me now. He's the publisher of the Gold newsletter, the organizer behind the New Orleans Investment Conference, and he'll be hosting a webinar tomorrow on Kitco.com called Money, Debt, and Gold. Are higher gold prices all but assured? I'll give you the link later if you'd like to catch that tomorrow on Kitco.com. So, Brien, thank you so much for being with me today.
Me too, Daniela. Good to talk to you.
So, Brien, tomorrow you will be leading Kitco's latest webinar, and I'll be giving a link a little later on in the program. But for now, can you give us a glimpse of what you plan to talk about?
Absolutely. One of the things I address, Daniela, is the fact that gold earlier this month actually broke through its 300-day moving average for only the second time over the last 11 years. The other time it's done that was in 2008 during the U.S. credit crisis. And what that's telling us is that this situation in Europe is analogous to 2008, and we can take some lessons from that, and it's very instructive as to what to expect in the near term and the long term for gold.
So, Brien, when the crisis in Europe started a few years back, we really saw gold responding positively to it. Now, not so much. Can you explain why?
Well, gold doesn't really respond as a safe haven to financial crises, much to the surprise of many people. They really feel that gold is, whenever there's a financial crisis, that gold will go up. But in fact, those times that it does rise in price, it's really just speculators betting that someone else will buy the metal for that reason. In reality, gold only reacts positively and significantly to the prescriptions for a financial crisis, which are almost always some sort of monetary inflation.
Brien, how much weight are you placing on the U.S. dollar right now and its impact on gold?
Well, it does affect gold in the near term. But gold is reacting, or the last half of this bull market for the last 5 years or so in gold, the metal has been reacting not so much to dollar weakness, but due to a distrust of all currencies. The simple fact is that during these series of financial crises we've had, the reaction has been, the prescription has been to create money in all currencies. And that's what gold is reacting to, the fact that there's so much more fiat currency being created across the board.
So, Brien, that's what surprises me, though, because if there is distrust for the other currencies, wouldn't gold be seen as one of the best alternatives?
Yes, it will be eventually. But what has to happen is that the market has to gain a general understanding that that monetary inflation is coming up. You know, the quantitative easings added about $600 to the gold price between QE1 and QE2. And when we see that come back to the fore and see the market and the speculators begin to understand that that's on the way, then we'll begin to see gold really respond.
Brien, do you think we'll see Greece exit the euro, and will we see more money printing happening over there?
Yes, on both counts, and not just in Greece. Greece is still a very small part of the European economy. The real money printing is going to be to a Europe-wide, a pan-European creation of more euros to try and lift it out of the recession. We'll also, I think, see that in the U.S. I think the jobs numbers coming up shortly for the past month will be very revealing. And if we have 2 bad months in a row, I think you'll see that quantitative easing theme come back into play.
Right, Brien, jobs figures coming out this Friday. We always talk about Europe and we always talk about the U.S., but when we're looking at gold, are there other factors outside of this box that you think we should be paying attention to?
Well, we continue to see growth in demand in China. And one interesting thing that people don't appreciate is that not only is the Chinese population increasing, but also the intensity of use or the demand for gold per capita is also increasing. So it's a multiplication factor for gold demand growth in China, and that bodes very well for the future.
Right, China will be one of the countries most likely affected should there be a fallout in Europe. At least that's what many analysts are telling you right now. Do you agree, Brien?
Yes, there is a potential for an economic slowdown in China, which would be bearish for gold. But what we're talking about there is, a fall off from 9% growth rates to 6 or 7% growth rates. And as I said, the increase in the Chinese population, the increase in the gold demand per capita in that population will offset a lot of that, a realistic slowing in Chinese growth rates.
So, Brien, long term, would you say you're still bullish on gold? And if so, when do you think the markets will start picking up again?
I am bullish long term. I think this summer we'll see more evidence of a slowing in the U.S. economy, and I think what we'll see is continued volatility as a result of the headlines coming out of Europe. But eventually, you'll see monetary creation in Europe to get out of this morass. So I think sometime around mid to late summer, we're going to see a real rebound in gold. I think we've just about bottomed around this area. We won't go much lower. But the upside is very significant if we see the same kind of rebound that we saw in 2008.
Brien, before I let you go, I also know you're the face and the organizer behind the New Orleans Investment Conference, one of the most popular conferences in our industry. I also know you have a stellar lineup this year. Why else should people attend?
Well, this is going to be a crucial turning point for the U.S. and global economies and for investors the world over. If we see the status quo in the U.S., we could see far higher gold prices. If we see a changeover in the White House and Congress, we may see a bit of a dip or a correction in gold for about a year. But I think eventually you'll see the effects of monetary inflation coming to the fore. So we're bringing in a lot of geopolitical and economic experts. In addition to Sarah Palin, we've got Dr. Charles Krauthammer, Doug Casey, Peter Schiff, Rick Santelli, Dr. Mark Faber. Really a dream team of experts, not only in precious metals, but in geopolitics and economics.
Right, and Kitco News will be there. Brien, you mentioned the changeover in the White House. Which would favor gold more, a Republican or Democratic win?
A Democratic win would favor gold. But as I said, I think there are greater forces at work that will be bullish for gold over the long term, regardless of who wins.
Fantastic, Brien, and I encourage everyone to sign up for your webinar tomorrow, and they can do so at the link below. It's kitco.com/webinar. We look forward to it. Thanks, Brien.
Thank you, Daniela.
And thank you for watching. You can email me any comments or questions at newsfeedback@kitco.com.